Hey everybody, it's Brian Shannon from alphatrends.net. Today's Friday, the 8th of November, and I hope you had a good week. The market certainly did. Look at some of these numbers, just a massive week, and the market got what it wanted politically. Whether you agree with it or not isn't the point. Look at your account. You're trading not for political reasons, but to make money. And if you are long, you had a great week, and you should be long because the trend is higher, and that's what the market has been telling us. So let's take a look at some charts and objectively make some sense of it. As we know, coming into this week, we were below the declining 5-day moving average, and I expressed caution. Only caution, not bearishness, because we were at the rising 50-day moving average as well as the anchor off of the September low. If we had broken down and maybe the catalyst would have been the other candidate got elected, then I think we would have probably headed down towards this anchor from the September low. I'm sorry, the August low. Instead, the market did this. It gapped up. So if you were not involved, it did not mean you could not participate in it. In fact, as I pointed out in Wednesday's video, we have a strategy that I've been talking about for over 20 years, which is chase the gap or wait for VWAP. Type that into Google and see what you get. We don't buy the gap, but we wait for the buyers to regain control back above the daily VWAP and buy it with a stop below the low of the day. You don't have to participate from the day before and take all that risk because, again, if the other candidate was elected, maybe this market would have opened at 560 instead of 588. We did open near 588. We pulled back briefly and buyers regained control. And we've been above the week to date. I'm sorry, the week to date, but also, and here's what I did on TradingView, so I have to do it here. This is the anchor from the event. The event is the election, and the election was themed orange, in my opinion, for our candidate. And I'm going to keep referring to the anchor from the election, and I'm going to keep it orange on the time frames that we see. Yesterday, we pulled back to the daily VWAP a couple times. We got the Federal Reserve out of the way. We had a very small shakeout there, and if you got short in there, you clearly weren't looking at the time frame with the rising 5-day moving average or the 50-day moving average or the 100-day moving average. Let's put that anchor from the election right here as well and color it orange. So as long as we're above these key levels, the market is innocent until proven guilty. Argue with it all you want, but you're going to be wrong. So the name of the game here is protect what you have, raise your stops up to the levels appropriate for your time frame. And if you're not aboard, learn the strategies that I share constantly about how to get involved. Same is true for Tesla. Tesla was, you didn't have to, sure, it would have been nice to own it over here and see it gap up, but you didn't have to own it on that gap up. You didn't even have to own it, right here on this move. Instead, I had pointed out this several times to Alpha Trends members that we had pulled back to the anchor from the election, and then again, and then as we pulled back to what was the 2-day VWAP and got back above the daily VWAP, that is a classic technique that I have in my anchored volume weighted average price book about buying it after it pulls back to the 2-day and gets back above the daily VWAP with a stop below the low of the day. So Tesla, again, you don't have to take all that risk and buy the day before. Just because we get a gap up doesn't mean you can't participate. And now the name of the game is have your stops. For me, my stop on my final third is right here in Tesla. Let's take a look at NASDAQ because that's at a new all-time high as well. And there's nothing bearish about all-time highs. So higher highs and higher lows above all these key moving averages. Just be careful about chasing the market and waiting for your opportunities to get back involved at low risk points if you don't have the exposure that you're looking for. The Russell 2000 briefly got below the anchor from the election, but you can see it was only briefly intraday, and we're still holding the anchor from that. We're at not all-time highs, but certainly year-to-date highs if we look at the weekly time frame. I think it's just a matter of maybe next week, maybe the week after that. A new all-time high is almost certain, I think, for the Russell 2000. So position yourself accordingly. Maybe you're going to be a buyer Monday after a slight pullback, and then we get some strength with a stop under here. That seems like a good risk reward, but you have to have your risk. You have to know where your stop is. Semiconductors taking a little bit of a breather in here. Nothing, not a big deal. That is today's breather, and they're doing it the way I wanted them to, which was to go up here and to break past this little high right here. It didn't break it, but you have to ask yourself always, where has it come from? It just rallied from 240 to 260. That's about a 10% move in just a few days. Where did it have the potential to go before it might encounter supply? Right at that breakout level. So now, it doesn't mean we have to pull back and have a deep price correction. It might end up being we have a shallow price correction, and maybe we come down like this next week, and it ends up being more of a time correction. Well, if that's the case, what you want to do is you want to put an anchor off of this peak right here, and you can see that is where we found supply all day today. That anchor will continue to develop like this. The anchor from the election will come like this, and the 5-day moving average will come like this. So maybe if this is, if we were to say, this would be Monday, this would be Tuesday, maybe Wednesday is the day that this becomes a low risk purchase over here with a stop underneath the higher low at that point or this point. It's not a prediction chart, it's a potential scenario, because maybe we're not going to correct through time. Maybe we're going to get a deeper price pullback, and that's fine too. The thing is, you want to just anticipate the different scenarios and wait for them to develop rather than getting that FOMO and chasing things and making sloppy mistakes and getting punished for it. Biotech stocks are on their way. As I said, you could have bought it as it got back above the daily VWAP here. There's plenty of opportunities you don't have to own before the gap. These guys are on their way. They look to me like they're headed towards 122 sometime in the next several months, maybe by March of next year, if I had to guess. But they're on their way. They have been building energy. We've been observing this week after week with these higher lows and more repeated tests of resistance. We broke through that this week. They're on the way. The job is here, if you're not long, to find the low risk entry points. Maybe it pulls back to the anchor from the election and then gets back above the anchor from this peak. And then you've got to be ready to say, I'm getting involved right here with a stop, maybe underneath this level. They are on their way. So if you're not long, look for places to get long is the message of the market. Financial stocks holding up really well. I was thinking maybe they would correct a little bit. But again, this is only a potential scenario that doesn't tell us, hey, I want to sell short under here. That's not my game. Not when we have a rising 20, 50, 200-day moving average. I'm not looking to sell short these markets for these little nickels and dimes on the way up. The sum of the rallies is always greater than the sum of the declines in an uptrend. So why waste your time with these little pullbacks, whether they're going, pulling back by price or correcting through time? It just doesn't make sense. The direction of the trend is what matters most. Bonds, they're starting to recover a little bit, but again, the Federal Reserve has cut interest rates by 75 basis points this year. Bonds are down year to date. That means yields, real yields, your mortgage in that are up year to date. It doesn't have to make sense. We're not here to make logical decisions about, hey, the Fed did this, therefore interest rates have to do that. That is a game for theoreticians, for academics, for professors to go through. Our job is to listen to price action. And when we're below, when we came up to that anchor that we're very clear about, the anchor from this peak at the last Federal Reserve meeting, well, we saw yields soar from that point. And you've got to just listen to the message of the market. The message of the market for the bonds is, these guys are a mess. You might as well trade something like FXI if you're going to trade. Trade China if you want to really gamble. Because how do you manage risk with gaps like this? And this week in particular, look at the action we had here. This was Monday, gap up. Tuesday, gap up. Wednesday, gap down. Big gap up on Thursday. Everyone's feeling good until they get punched in the face this morning, spit it all out. And then this is where they were for the week. They closed slightly lower. The China stocks traded slightly lower for the week. But look at all the agony from the buyers and sellers in here. I don't know how people trade that. I don't know why they try to trade it. It doesn't make sense to me. Energy names are recovering. They've run up to this band that we spoke about previously. It doesn't mean it is resistance. This is prior resistance in here. Right now, we saw that we backed off it briefly, and what happened with that? We backed off for a day. Now we're holding back above the anchor from the election. Maybe this market is going to, shake out first, or maybe it's just going to continue to rally right here. What we're finding, though, is we're getting evidence of where the buyers are willing to defend. I would say that if you're looking to get long the energy names, I would change my mind if it went below this low, maybe even this higher low. I don't trade energy names, so it's not something I'm going to trade. I'm just pointing this out to you. Bitcoin, it's in an uptrend. It's at all-time highs. You don't need to see the chart. You don't need to see the chart of Solana. They're in uptrends. Have a good weekend.